Hello everyone, welcome back to another video. If you are new to this channel, my name is Farhan and I help POA students like you ace their exams. Today we have got a question from a past exam. This question is from 2016 paper 2 exam and this is question number 5. In this question, we are mainly identifying the different types of errors which are involved and also preparing the relevant journal entries to correct these errors. So let's have a look into this question. Sue Ling prepared the trial balance for her business on 30 June. The following errors were discovered. So here we have got 4 errors which we have identified, and our requirement in this question is to mainly prepare the journal entries to correct these errors and also identify the different types of errors which are involved, mainly for error number 1 and error number 2. So let's start by answering the first question. State 2 reasons for preparing a trial balance. Now, why do we prepare a trial balance? A trial balance is prepared to check the arithmetic accuracy of ledger accounts. So what do we understand by arithmetic accuracy? We want to check whether the total of debits equal the total of credits. If the total debits do not equal the total credits, then you know something is wrong and you can go back to the source to figure out what went wrong. Then the second reason is that the trial balance provides us with a list of balances which helps us in the preparation of the financial statements. And the financial statements that we always prepare is the income statement, which is also known as the statement of financial performance, and the balance sheet, which is known as the statement of financial position. So let's look into the first error which we have got, and we will identify it and also prepare the journal entry. A credit sale of $740 to Lee Tam was incorrectly recorded in Lee Sun's account. All right, so this is what we call an error of commission. And the reason we call this an error of commission is because the error has been made within the same category and included in the wrong person's account. So what's the same category I'm referring to here? Lee Sun and Lee Thum are both credit customers of the business. In other words, we call them the trade receivables. All right? So this is the same category of trade receivables, but the wrong person's account has been used. We recorded the transaction in the account of Lee Sun, instead recording it in the account of Lee Thum. All right? So that is why we can call this an error of commission when the error has been done in a wrong account within the same category. The same category we are referring to here is the category of trade receivables, who are the credit customers of the business. But we ended up recording it in the account of Lee Sun instead of recording it in the account of Lee Tam. All right? So what was the error that was originally made? So when we would have recorded this transaction initially, we would have debited the account of Lee Sun, trade receivables Lee Sun, by $740, and we would have credited sales revenue by $740. All right? So when we would have debited the account for trade receivables Lee Sun by $740, we would have thought about the fact that our assets are going up in value, specifically our current assets, because we have now a credit customer to whom we have sold $740 worth of items on credit. And this customer has made a promise to repay us this amount in the future. So the wrong entry here is mainly the debit entry, which we recorded in the account of Lee Sun, and that is mainly the wrong person, which goes by the definition of error of commission. Okay? Now, how do we fix this? To fix this, we need to reduce what we have recorded in the account of Lee Sun. So initially, we recorded $740 in the account of Lee Sun as if Lee Sun is our asset and our assets are increasing, and when assets increase, we debit them. Now that we have to remove this $740 of assets entirely, our assets now have to reflect a reduction, specifically in the account of Lee Sun. So when Lee Sun's account is going down in value, assets are going down in value, and therefore we have to credit the account for Lee Sun, trade receivables Lee Sun, by $740, which is the correction that we will do. Okay? And simultaneously, we need to increase our assets the amount that Lee Tam actually owes us, and therefore we will debit the account for trade receivables Lee Tam, who is our current asset, and assets are increasing in value, and when assets increase in value, we debit them. So that's why we will debit trade receivables Lee Tam by 740, and that means that our assets are increasing specifically due to the credit sales that we have made to Lee Tam, who is the correct person in this case. And at the same time, we will reduce the balance that we thought initially that Lee Sun owed us, which was a mistake, and we would be crediting the account for Lee Sun, okay? So this is the main journal entry to fix this. You gotta be specific about trade receivables because both Lee Tam and Lee Sun fall within the category of trade receivables who are also the credit customers of the business, okay? All right, so the first transaction, the first error has already been taken care of. So when you're ready, we can move to the second transaction. Purchase of fixtures and fittings, $1,500 was recorded in the maintenance expense account. All right, so this is what we classify as an error of principle. And the reason we call this an error of principle is because the error has been made within the fundamentals, where the wrong categories are involved. Purchase of a non-current asset is a different category compared to an expense, right? So in this error, we have treated the purchase of an asset as an expense. And as you can see, assets and expenses are different categories to each other, which means the error is within the fundamentals, and therefore we can call this an error of principle. Now, let's have a look into the error that was actually made. So we know we ended up recording the purchase of fixtures and fittings as maintenance expense. So when we would have made this error, we would have debited the maintenance expense account by $1,500 and simultaneously credit the cash at bank account by $1,500, obviously, which is a correct entry because your funds available in the bank account will go down when you are purchasing something or paying for something, okay? So the main error here is the first line where we debited the maintenance expense by $1,500. We didn't really have any expenses to begin with. This should have been actually the assets which were supposed to be debited. So how do we fix this? To fix this, we need to reduce the maintenance expense by $1,500. When expenses go up, we debit them. But now that we have to reduce it, we are crediting maintenance expense by $1,500 to reflect that reduction. And simultaneously, we will increase the balance for our non-current asset, which is the fixtures and fittings account. When assets go up, we know that we debit them. So that's why we will debit fixtures and fittings by $1,500, and we will credit maintenance expense by $1,500 to reflect the reduction in expense, okay? So this is how you correct the second error that we have got. So when you're ready, now we can move to third error. We don't really have to identify this because we were supposed to identify the first and second errors as part of this question. So let's see what's going on. So cash drawings of $200 correctly recorded in the cash book had been posted to the capital account. So you need to understand this line very carefully. So cash drawings of $200 has been correctly recorded in the cash book. So when we are referring to the cash book, let's just say that if we are withdrawing some money, our balance available in the cash at bank account should go down because assets are going down in value, right? So the error that was made was that the capital account was debited by $200 and the cash at bank account was rightly credited by $200, okay? Because obviously we withdrew the money from our bank account, and that would have resulted in a reduction in the balance available in our bank account, and when assets go down in value, we would have credited it. So the error here is mainly in the capital account being debited by $200. When you're withdrawing money from the business, it's true that your capital goes down in value, right? But to record that withdrawal, there is a separate account which is known as the drawings account. The drawings account is a separate account which tracks all the withdrawals that you as the owner are going to make from your business. So instead of recording it in the capital account, what we have to do is record it in the drawings account. The error that was made was that we debited the capital account. So now we have to fix this. To fix this, we have to increase the capital account back by 200. When capital increases, we always credit them. Okay? And simultaneously, we have this separate account, which is the drawings account, which is always debited by default, because drawings basically is an account that tracks all the withdrawals that we have made from the business, and drawings reflect a reduction in owner's capital or owner's equity. So therefore, whenever we have got some drawings, it is by default or by nature debited. Okay, so we are going to debit drawings by 200, and at the same time we will increase the balance available in our capital account by 200, and to reflect that increase we will just credit the capital account by 200. Okay, all right, so let's look into the last error, which is the fourth error we have got. A check for $460 paid to a credit supplier Shan Yin had been credited to his account and debited to the cashiered bank account. All right, so I will just make this transaction simple and you will know it makes sense. We can just call it payment of $460 to a credit supplier, right? Okay, so we had this thing where we had to make a payment of $460 to a credit supplier. So let's first look into the right way of recording this, okay? Right way of recording this. The right way of recording this payment of $460 to a credit supplier, all right, is to debit trade payable, specifically the account for Shan Yin by $460, because Shan Yin is a credit supplier, right? And when our liabilities go down, because we are making the payment, we no longer have an obligation towards Shan Yin. Liabilities, when it goes down, we always debit them, okay? So debit trade payable, specifically the account for Shan Yin by $460. And simultaneously, our funds available in the bank account is going to go down because we're going to make this payment. So bank account being an asset account, when it goes down in value, we would be crediting it. So we would credit the account for cashiered bank by $460, right? So we understand that this would have been the right way to record this. But what was the error that was actually done? The error, based on what the question clearly mentions, was that Su Ling debited the account for cashiered bank by $460 and credited the account for Shan Yin trade payables by $460. So as you can see, when you compare the error and the right entry that we were supposed to do, it's basically a complete reversal, where debits have been treated as credits and credits have been treated as debits. Isn't that so? So this is what we call an error of complete reversal, okay? We were not supposed to identify this as part of this question, but you get the idea of the error of complete reversal now, okay? So how do we fix this? All right, so how do we fix this? Now here is where you need to be careful. So when you look at the error, we have debited cashiered bank by $460, but we know the right way to record this would have been to credit cashiered bank by $460. So we want to now make sure, how do we go from debit cashiered bank $460 to credit cashiered bank $460? So credit cashiered bank $460 is the final balance that we are looking for. Okay, so how do we go from debit cashiered bank $460 to credit cashiered bank $460? If we want to go from debit cashiered bank $460 to credit cashiered bank $460, we need to make sure that we offset the entire $460 of debits that we have got in the cashiered bank account when the error was made. And then we have got some surplus, $460 left behind on the credit. So how can we achieve that? If we credit the cashiered bank account by $920, then we're making sure that this $460 of debit is entirely offset first, right? And then we are left with an extra $460 of credit balance. Therefore, the fix for this journal entry is to credit the cashiered bank account by $920, okay? And we repeat the same thing for the account of Shan Yin. So we want to go from credit 460 to debit 460. So how can we achieve this? We need to first make sure that the entire $460 of credit in the account of Shanyin, the error that we have originally made, is offset. And then after this $460 of credit have been offset, we are left with a surplus of 460 more on the debits. So how can we achieve that? We can just simply debit the account for trade payables Shanyin by 920. So when we do it 920, we're making sure that the 460 credits are first entirely offset, and then we have an additional surplus lying around 460 credit, which matches the correct journal entry that we were supposed to do initially. Okay? All right. Yep, so that's it for this transaction. Okay. So when you're ready, I'll just conclude today's lesson. So I believe you found value in this content. Make sure to drop a like and subscribe to this channel. In the description, you'll find a link to book a free Zoom call with me and discuss your coaching or tuition requirements so I can help you prepare for your exams in the month of October. So with that being said, I'll conclude today's lesson and I'll see you in the next one.